We begin here in New York with the big issue. Some subtle signs of stabilization in China.
The numbers is finally perking up a little bit more.
It doesn't actually look like China's having too much of a problem.
The retail sales number definitely was stronger than expected.
We take a lot of heart from the retail sales data in particular.
Infrastructure investment is picking up.
And the strength of domestic consumption and the domestic consumer.
Outside of car sales, consumer spending and consumer confidence has been quite resilient.
Domestically, actually, this is a pretty good set of figures in terms of Chinese growth.
We can take some comfort in that the expansionary measures by the government are actually working.
Now, China is going to keep adding a bit of stimulus.
Indeed, we are continue to see second quarter growth slowing, but I think we are seeing stabilization.
So the key question, is the recent improvement sustainable? Joining me around the table here in New York, Paul Richards of Medley Global Advisors, Patrick Palfrey of Credit Suisse, and Phil Guarco of JPMorgan Private Bank. Phil, let's begin with that question. Your thoughts? Is this improvement in the monthly data sustainable?
You know, I think it is for now, because I think the big reason that China was going down was actually not the trade war. It's the end of the tightening to wring out issues in their own economy. So I think for the time being, we still think China's going to grow by 6.2, 6.3%. And so we're kind of steady as we go there. We see a lot of things picking up there, especially potentially in housing. And then some of the trade issues seem to be a little bit more resilient and longer term.
Paul Richards, your thoughts?
Well, nominal GDP went from 7.8 to 8.2% Q1 on Q2. That to us is the big number. What that shows is the decision the government made to go with fiscal relative to monetary policy to stabilize things in the first half has worked. It takes a lot of pressure off them to do much more in H2. So they've got this thing stabilized. Now it's about the trade outcome.
What do you think, Patrick?
Well, I mean, what's important is it needs to generate the growth that we need for U.S. equities to work. So much of what we sell goes into China. So to the extent we see stabilization, it will be important. It's going to help those multinational companies that send so much overseas. And that's really what we're looking for, success within those names.